Hi, everybody. Welcome to this session on insurance pricing. Thanks a lot to all of you for coming to this session today that Akur8 is co-presenting with Milliman. First of all, I'm going to introduce myself. So I'm Sam, and I'm CEO and co-founder of Akur8, and I will co-present this session together with Sheri Scott, who is Principal and Consulting Actuary at Milliman, and Brune de Linares, who is Chief Client Officer and co-founder of Akur8. As an introduction to this session, I wanted to share with you a few highlights of a pricing survey that we realized earlier this year on the second quarter and that we just released last week. By the way, it's available on our website with plenty of very insightful elements, but I'm just going to share with you a couple of results. So we've been surveying more than 100 respondents across 34 countries. All of them are coming from non-life insurance companies and of pretty much all lines of businesses. First question we asked to the respondents was, what is for you the most important competitive differentiator for insurance companies? And the first finding that we had is that across all lines of businesses, pricing is always in the top three, together with customer experience and distribution network. And 81% of the respondents considered important or very important the pricing as a competitive differentiator, and this is coherent across the globe. So this increased importance of pricing is probably an effect of a more difficult and less stable market, and it becomes clear that in this new normal, it's mandatory for insurance companies to modernize tools and processes for pricing and to place pricing at the center of the decision-making process. So, in a context where pricing, as we just saw, is a major differentiating factor for insurance companies, we asked respondents, but finally, what are the key challenges that you need to overcome to make sure that you can increase pricing sophistication? So, as you can see, the first challenge that has been mentioned by our respondent is the lack of data. Not really a surprise. But what's really interesting are the three following ones. So if you look at the three following ones, you have lack of resources, lack of collaboration, and lack of automation. And those challenges, those issues are typical of processes that are heavily manual. And no doubt that in a fast-changing environment that requires more agility, that requires reduced time to market, there is an increased pressure on resources. And you all know that finding good actuarial resources is quite tough on the market. So when there is more pressure on resources, it's not a solution to just increase the team because it's very, very hard to do this. And the other option is just to try to increase productivity to make sure that you can make more with the sales team, with the same team, sorry. But then it requires advanced automation, it requires advanced collaboration, and it leads us to the third question. Because of course, tooling is an important way and an enabler to increase automation. So we asked to the respondents for each step of the pricing process, what are the tools that are currently used? And the first observation that you can see is that definitely this tooling is extremely fragmented. There is a use of multiple different tools at each step of the process. And if you deep dive on like technical pricing, you see that companies are relatively well equipped with ad hoc solutions, and Akur8 is one of them. But when it comes to commercial pricing, when it comes to price adjustment, rate making, then the market leader is Excel. So when looking at those results and considering the importance of pricing, as we just mentioned earlier, we notice a clear under-tooling of insurance companies on this pricing process. And there is a need to evolve there is a need to increase the usage of tools to make sure that those tools can become an enabler to increase pricing sophistication. So I think it's a good transition to Sheri, that is going to share with you more insight on why pricing is becoming a strategic imperative.
And I'm going to ask you at the back to put the slides on the screen. I can't see any slides on the screen. Oops. So we're going to talk about why pricing is a strategic imperative today. And we're going to start with a picture that I like to share. Insurance, about 10 years ago, I want to say, was the pricing and the underwriting was done like the dinosaur in the ice ages. And today, what you really need is not only because you have emerging risks and new coverages and exposures that you really need to learn how to price in new and different ways, but also because you have the technology that's available. We need to be able to price in a much more modern and sophisticated age. So I'm calling that the digital age. And why do we need to do that? In terms of the digital age of pricing, it really has come about because there's really 3 trends that have been happening over the last 10 years. The first trend is technological trends. First of all, we've got all kinds of new data sources that have become available. Those data sources are things like telematics, driving behavior, autonomous vehicle sources that are coming directly from the vehicles themselves. You've got all kinds of computing power that is now available in terms of the size and the larger processing powers that we have capabilities for. We've also shifted from very simple models to GLM models, and now to much more nonlinear and all kinds of AI that models that we're building. And then finally, the automation that's now available in terms of pricing tools that are available out there and the cloud, that's really created this technological trend that's really opened up a lot of doors and opportunity in insurance. There's also the industry trends. Why do we need to do this? Well, there's climate change. If anyone's denying climate change, come live with me in California. There's wildfires every month, and we have all kinds of issues in terms of catastrophe that the insurance industry is covering and reinsuring and insuring. We need to deal with those industry trends that are happening. Also COVID, we have pandemics now. COVID really impacted a lot of both personal and commercial type coverages and insurance. They screwed up all our actuarial trends. So what do we do to price? So we need to be able to handle that in terms of the industry. You've got supply chain disruptions now when you're trying to get cars repaired, houses rebuilt, all kinds of supply chain issues, all kinds of trends that are just coming out in terms of emerging coverages. Now you need to cover cyber risk, you need to cover autonomous vehicles. We've created some products for that. So all kinds of underwriting innovation that there's an opportunity to do right now in terms of underwriting and pricing innovation. And then finally, regulatory trends. So if you're in the surplus lines market, well, be grateful. If you're not, you're in the admitted market, you have to really go through and make sure that any models you're creating, they go through a rigorous process of review with the state regulators. So it's really important that you evolve to deal with these regulatory trends. So we've also got the regulators actually have evolved. It used to be that regulators would review a model, and if you were dealing with a state that had a very large team of experts, like in California or in certain states like New York, Connecticut, Texas, they have really good modelers that can review your models. But if you're dealing with a small state that just doesn't have those resources, they've now created an NAIC model review task force that you can actually get your models reviewed by. So there's some regulatory shifts as well. And all kinds of new issues that have come about, like disparate impact, and we want to make sure that there's equity in insurance and no disparate impact. So how do you handle that? How do you check for that? And then finally, there's the data privacy issues. We're all sharing so much data, so the regulators really want to understand that they're protecting the consumers in terms of data privacy and all kinds of guidelines that they have in terms of models and how you integrate models into insurance. So in terms of the new technologies that are really allowing to reshape this whole pricing and underwriting process now, You've got the rise of this digital age, what we just talked about, all of those trends that are happening. It really creates a need, but we also have, it's empowering all those pricing teams to focus their efforts on real decision making. So I like to look at this. I used to be an underwriter, and before I became an actuary. So as an underwriter, what used to happen 30 years ago when I used to underwrite, I'd get an application for insurance. Everything was very manual. I'd go through, I'd make a decision, accept, don't accept the risk, price it, this is how I want to price it. You don't need to be spending your time going through all the application, make sure all the questions are answered, how everything's done. You can really automate that process in terms of modeling. So when you're building a model, you want to be able to do the data prep, visualize it, derive the variables. You really want to develop the model. That takes a lot of time. It used to be an 80-20 rule, where that would take 80% of your time. And then as actuaries and underwriters, we're spending the last 20% of our time actually doing real work and analytics. And let's switch that, switch it around. Let's spend 20% of our time to use a model that, or some software that helps us create this data and get the model built really quickly. And then let's spend 80% of our time making decisions about what we want to do. And so the model review, when you can then be doing the model review and selecting which model is important to you, you can be creating the regulatory filings, and we'll get in a minute with some use cases, but the Akur8 software, for example, they've built this regulatory platform within it so that once the model's built, you can just hit export, and it exports all of the model support that you're going to need for a regulatory filing. And we've gone through and collected all of the 54 state jurisdictions that we have in the country to identify what all their model review checklist questions are and help you put all that together so it's really easy. And then finally, you can concentrate on implementation. And what's important about implementation here is if you're doing all this manually, you're having to document everything and make sure you've got governance, being controls in place, version control. If you get something filed and approved with the regulator, that you're actually using that model the way you got it filed and approved. So it's really helpful to have a model and a software that actually puts that all together for you and helps you keep track of that from a governance perspective. So this is where we want to really switch that 80-20 rule to now be 20-80. In terms of the convergence of actuarial and data science, that was one of the questions that they asked on their survey that they just talked about. How valuable would the improvements below for your pricing team over the next 5 years be? And all of that convergence of data science and actuarial science was very big. It's very important. I think the actuaries bring one set of expertise to the table, the data scientists bring another set of expertise to the table, and it's that convergence of the two that's really going to empower everyone. So I actually agree with the survey results. And so the highest value in the sector is expected to come from this convergence, according to everyone that took the survey, according to the 80% of the respondents. And there's really more impact in business decisions that can be made because you're taking the time to set up the models and you're taking more of that time now to make decisions. So that's really a helpful tool to help you do that. It's also going to allow you to create more automation because rather than taking 2 months to build the model and set everything up and prep the data, maybe you can do it in 2 weeks and then you can spend that time on implementation. Now, why do we need these modernized skill sets? Well, it's really important because we've got all this convergence of the data science and the actuarial subject matter expertise. You really can't do it with one without the other. You can have really great data scientists, but if they don't understand how exposures actually earn in insurance, or if they don't understand how losses develop in insurance, they might not actually set up a model that actually gives you information that empowers you to make a good decision. So just as a simple example, the way I like to explain it is if you have a model that's trying to, let's say, come up with rates and indicated rates for territories, let's say, and territories is one of the rating variables, and you just started selling a whole bunch of policies in a new territory. And this is a long tail line of business, meaning it's going to take years for these losses to develop. What can happen if you just throw a model together with a data scientist without understanding about the loss development process that the actuaries bring to the table, is that your model's going to tell you that that territory is really profitable and you should go out and you should write a lot of business in that territory. Well, that might not be true because you haven't applied the loss development, you haven't thought through that process. So that's why you've got that convergence of the actuaries and the data scientists that are super important. And really the ability to master all of these challenges with large data sets, with all this new machine power tools that we have and learning techniques, and developing all these visualization techniques from a data science perspective, and then marrying that together with all the customer knowledge and domain knowledge that the actuaries have, that's really key to make sure that you can do that really quickly. And why rebuild the wheel? Why recreate the wheel? Why not just use a software that can help you do that? So really that's where we're seeing this rise. So in terms of the actuary and 2.0, I'm calling it, so the actuary 2.0 is really allowing the actuary to generate business impact instead of being this back office actuary that sits back there and runs with all the data and produces all these models and then presents it to the business leaders that say, well, we don't really understand what you're doing here. Rather than that, let's create an optimal situation where you're bringing the actuaries that have the domain knowledge and you're bringing the software together where you can have data scientists working with it, and you can really explore all of these innovative data sources really easily, and you can have something very agile insurance product development, really quick processes, and you can really integrate the competitive pricing into it, not just the actuarial indication, but the competitive landscape, and really optimizing your underwriting strategies all together as sort of more like business decision making. And let me tell you, if you're not already thinking about doing this, InsurTech started, I want to say about 10 years ago. If you're not already thinking about doing this, you're going to be on that left-hand side of that screen that I started with, the dinosaur ages. And you're getting, that's what this whole opportunity, ITC and everyone here, has been created from. It's been created from the insurance industry that just wasn't reacting quickly enough to the customer needs, the emerging risks, the tools we need. And that's why we're here today. So we're all doing that. So it's really important that we get to the right-hand side of the screen where we're actually doing something really great and you're being empowered to really succeed. And then finally, I'm going to pass it back over to them to do a panel talk.
Thank you very much. Thank you, Sheri. So I'm really happy to have all of you here on stage with me. So first of all, I want to thank you for being here and sharing your insight with the audience today. My first question will be, can you please introduce yourself, what your team, you and your team are doing, and maybe a couple of elements on your organization. Maybe Mike, can you start?
Sure. Hi, I'm Mike Seenstra. I'm the Chief Actuary at Hippo, running pricing, predictive modeling, reserving. Hippo is really about protecting the joy of homeownership, where the insurance is the backstop. So how do we use data and analytics to help you maintain, improve your home? Then when you take these actions to de-risk, make sure that the insurance product that we're creating is giving you that discount. So matching that financial risk and financial incentive with the actions you take on your house.
Thanks a lot, Mike. Joe?
Yeah, my name's Joe Good. I'm an actuarial analyst at Bass Underwriters. We're excess and surplus lines at MGA based out of South Florida, writing business in all the hurricane-prone areas. Being in the excess and surplus line space, it's pretty exciting right now. Market's in our favor, so we're excited. And there's a lot of things that we're introducing technology-wise, which we can talk about in a little bit.
Thanks a lot. John?
Hello, I'm John Ferraro. I'm Senior Vice President and Chief Pricing Actuary at TMNAS. We provide services to Philadelphia insurance companies, Tokyo Marine America, and First Insurance Company of Hawaii. We write all over the country, primarily middle market, all lines of business, package, specialty lines.
Thanks a lot. And Sheri, maybe you can tell us the customer you are working with, type of insurance company, InsurTech that you know on the market.
Sure. I'm Sheri Scott, so I'm a principal at Milliman, and I develop insurance products, and I help clients such as these stand up new insurance products that are really tech-infused. It's kind of how I like to describe it. So how you integrate automated underwriting, integrate automated models that really help create a sophisticated ability to match rate to risk.
Thanks a lot. So let's now discuss pricing. I think it's a good topic for today. So my first question would be how in your organization pricing allow you to differentiate from your competitors, and is it a strategic pillar for your organization and something really important? Maybe Joe, can you start?
Sure. Pricing is key. We're a niche player. We have to make sure we can price to the risk, whether, in the various market segments we're in. It's key to what we're doing. We have to keep up with things like inflation, social inflation, and just make sure our rate levels are where they need to be in order to make money.
Thanks a lot. Joe, can you give us some insight?
Yeah, pricing at Bass is a little bit different. Since we're in the E&S space, it's very demand-driven. We've got the hard and soft market cycles, and everybody kind of just goes with the flow in the past. A lot of our London business has been that way. But we have really advanced the pricing in our hurricane or wind peril category, and it's kind of been an antedated process or, Excel-based process, kind of like that old-fashioned way of pricing things on the other perils. So Akur8 has given us that ability to now have just as sophisticated pricing on our other perils as we have been pricing our wind.
Thanks a lot. And Mike?
I'd say pricing in the personal line space is kind of table stakes. My bosses just expect me to get it right. Get each month right, get each segmentation right, and every year make it better and faster. I think your pricing needs to be part of your overall strategy. How do you create the right product, the right underwriting, the right distribution for that customer at a price they're going to value and that you're going to make money on? And the actuaries or data scientists provide that input so that, where there's risk and uncertainty, actuaries facilitate better decision making. I think pricing comes to a core tenet of that strategy around insurance, where if you're wrong, things are terrible. If you're right, you're always wrong to some degree. If you're right, the rest of the business operates very efficiently and successfully. But it's really about how do you drive profitable growth, not just pricing for pricing's sake.
Okay, so pricing as part of the strategy.
Yeah.
And Sheri, maybe can you share some insight on potential changes that you've seen on the insurance industry related to how strategic is the pricing?
Yeah, I would say that it used to be that you would create prices and once a year you would look at and you would do an indication, we call it, and you would look at the pricing and you do a filing with the regulator if it's admitted, or you do a desk filing if it's surplus lines. The strategy has really shifted right now because there really needs an ability to take all this massive data and all this massive processing power that we have the ability to digest now and really create more segmentation in your pricing and create opportunities to better match the rate to the risk. So within your pricing, to look at it at a more granular level and to look at the individual consumers that you're insuring or the individual risks, rather than looking at things on a much more aggregated class level, we would call it. So I see that strategy moving towards from more generalized, aggregated to much more individualized matching of rate to risk, and doing it in a way that you're incorporating outside data sources, because a lot of these insurtechs are startups and they don't necessarily have a lot of their own insurance data. So using different sources of data and being very creative about where you get that data from.
Perfect transition for my next question, because of course when we are discussing with our customers on pricing, we are discussing on data. Which data, what type of data, do we have enough data? Do we have clean data? Do we use external data? And can we use, after 2 years of pandemic, the data that we have within the organization? So tough question. So I'm pretty sure that this is a challenge that you have to overcome. Maybe, John, can you share some insight on how do you handle this data strategy and you build data that you can really activate for good insight?
Okay. One of our first roles is to provide information to our underwriters to make sure they make the right decision. I mean, that's number one. And so the more data we can give them, the better off we're going to be, and they're going to be. So it's really leveraging whatever information we can and putting it in front of the underwriters. So part of our job is sometimes we cannot get it right. We don't have enough data to get it right. And as actuaries, we do the best we can with the information we have. And you know, it's not always going to be perfect. So give the underwriters the best technical price you can give them, and then set them up with any additional data you have so that they can do the right thing and they can make the right choices.
Thanks a lot. Mike, can you give us some insight on Hippo?
Yeah, I mean, as an actuary, I always want more data, but data it's expensive to maintain, it's expensive to get, to evaluate. And there's tons of data sources out there, like you see here. I think what's really important is it has to fit into your overall business strategy, right? So when you're doing pre-fill, is your end customer the person on your direct-to-consumer channel? Is it the producer? How does that fit in, and how are you helping them achieve their goal of protecting their liability, their auto, or their home? How, when you feed it into your models, are you making sure it's accurate? And not accurate on a retrospective basis, but prospective. So a lot of the time, the understanding is really about making sure you have the right data, clean the right way, so that it's forward-looking. Sheri mentioned about actuaries being backroom. I've had the benefit of my entire career being a front-room actuary, sitting with underwriters in an agent's office, and really it helps you understand the right way to set up your models, so that, as the saying goes, your record not just gets pressed but played. How do you develop your model from the back office through the decision-making process into the marketplace to be successful? It starts with data, but it understands the cost of the data, the use of the data, the implementation, ultimately, so it helps that customer of yours get a better product, or a better product at a right price.
Thanks a lot. And Joe, maybe can you share how BAS is handling with data collection and the data strategy that you have?
Yeah, our data strategy really is, from my perspective, there's no shortcuts. I mean, we had to go back 40 years ago where we started to purchase some third-party data. When we're writing, you know, business exposed to windstorm, things like when was that roof replaced, what age of the construction was the structure built, even things like the slope and shape of the roof can really affect how the wind plays on that loss. So we just had to start collecting the data, store it over a 4 or 5 year period, and like you mentioned earlier, you got to wait for the claims come in before you can really build some predictive models. So, you know, the peril of wind, put that aside, we have been collecting all the claim data and using it to match up all the stuff that we've collected over the years, and we finally are at the point where we're building our GLMs in-house and putting that into production. But it wasn't a 6-month process, it was a 5-year process, and the sooner you start, the sooner you'll be able to get to the end goal of building those predictive pricing models yourself. So,
yeah, we see that it's always a long process to collect the right data and to find a way to activate the data that you have and to trust the data that you have. Sheri, do you have some insight on the industry, and what do you see? Do you see more and more data, or people are more cautious on the data that they are using? What is your feedback on that?
I do see a shift towards insurance companies collecting more data at a much more granular level that they can actually use for doing analytics and predictive modeling. I also see the ability to be very creative, and I see many companies being very creative. Hippo is an example of that, about where they get their data from and how they complement the data that you get. For example, it's one thing to ask an insurer or an insured policyholder, a homeowner that just bought the house, what the age of the roof is, what kind of plumbing they have, the age of their plumbing. I just bought the house. I have no idea what it is. So it'd be much more accurate if you actually purchase the data or purchase the data from a third-party vendor that you know it's accurate data rather than getting it from the homeowner. So I see a shift towards actually using more accurate data sources, as well as an upfront, not after the fact to make sure that they didn't do it correctly, but upfront to pre-fill it. And then also I see all kinds of additional data sources coming together where you can actually put them together and merge them and create some pretty powerful models and tools.
Thanks a lot. So when you have data, you need to have technology to activate the data and to get the right insight. So we see in the insurance industry that lots of processes are still really manual. Potentially spaces are under-equipped compared to other industry. Do you think that your organization is pushing automation of some processes, and this is the future that you will see for some of the processes that you have within the company. Joe, maybe, can you share some elements?
Yeah, so our technology arm has been very influential in our company. We're a big believer in investing in different technological tools, so we don't be the ones that are left in the dust. We'd rather lead the E&S space and the tech space. So we have a full suite, about 20 people that are in-house software developers that build our own, quote, bind issue platform right in-house, and being able to work with a team that is directly attached to us gives like great opportunity to someone like me that's creating eligibility questions for submissions that come in, creating the pricing for the submissions that come in. So if we're pooling data from a third-party source like the year of construction, the plumbing permits, the roofing permit, when was the last electrical update, has the home been, updated or well taken care of, we're able to go into our homemade system and create a decline if the roof is this year and we're confident that it's that age, and we're able to do that very quickly, which is a huge advantage because we don't have to file that rate and wait and get it processed every year. We can change our rate and form at any time and really try to maximize our profitability in the market as quickly as we can. So it's been an exciting ride over the past couple of years because it has changed so fastly.
Okay, thanks a lot. John, what is your thought on how technology can help support some of the processes within an insurance company?
Sure. Since we have so many lines of business and we have so many states and market segments, and we're a small team, we have to find ways to do things and automate everything. We can't have many manual processes. I'm not sure many people can anymore. It's very tough. One of the ways that we can even make it easier in getting third-party data is get our data ready for that. And one example I've talked to many people about when I talk to geospatial, some of the geospatial vendors that are at the conference, is making sure we know what physical structures we're insuring, so then we can go out to third party and get that data. So it's a matter of making sure we're in a position to get that data and integrate it and then use it in our modeling.
Mike?
At Hippo, I would say continual improvement's kind of built into the DNA. And one of the reasons why I came, and I hope why a lot of people came, is really that the empowerment that's given. I have a lot of freedom to find an opportunity, build an improvement, and implement. And that's down to the lowest level person on my team. So we have people who come from larger carriers. They had ideas about making improvements and just were constantly stymied. So you have 24, 25-year-olds building things that are adopted by the entire organization as they're just building things in R and Python and deploying and automating across every function. We've built and rebuilt reserving models multiple times in the year, constantly improving efficiency and accuracy. We've built and rebuilt pricing models. And it really just gets to, you got a long ways to go to grow up. How do you accelerate that time frame? And every day, every month, the expectation is things that took 10 minutes last week are going to take a minute this week. And things that took a minute this week are going to be gone because you're going to have solved them for next week. And how do you create just not the culture, bring the talent, and then empower them so they're not building one solution, but building organization-wide solutions? That's something that I think InsurTech has both empowered these young actuaries, data scientists, people with ideas, and match them with technology people who, the amount that can be done, it is quite astonishing when you match talent across industries. So I'd say yes.
A matter of culture, talent, indeed. And Sheri, do you think that bringing technology, it's really a strategic imperative for insurance companies? And we see at ITC a big shift, but can you confirm or give me some insight?
Yeah, I'm seeing a big shift towards introducing technology and different tools and really empowering the folks within the insurance companies and the MGAs and the different avenues within the insurance industry to make sure that they can make good business decisions. I'm seeing a huge shift in that. I'm also seeing the need for it to be something that's structured, meaning you can create it and architect it, but it needs to really have a framework around it that you can actually do it in a rigorous manner so that you can, if you are filing on an admitted basis, you can ultimately get it approved. So it's really important that you're doing it in a manner that uses very good data science techniques and make sure that you control for overfitting and certain things. So it's really important that, or it's helpful to have a software that helps you do all of these analytics and really evolve really quickly.
Great. So my last question will be related to Akur8 because you all deployed Akur8 within your organization. So can you maybe explain why you decided to deploy Akur8 and what is the value that you get out of the platform? Mike, can you start with Hippo?
Sure. So at Hippo, our exposures are doubling approximately every year. So from that, you're able to extract a lot more value. So we're rebuilding our predictive models every year. And with all these data vendors here, what it really allowed us to do is just continually outreach to more data, bring that in, evaluate it, and have it be part of really the modeling process. Whereas if you used a typical one, you have to clean the data first, you model second, and implement third. And this way we were to iterate through, identify variables, keep building, and basically within a year of implementing a model, we have built new ones, improved upon them, and are ready to file again. So I think this speed has allowed us to not just get that additional exposure, but marry that with a lot more data sources, evaluate hundreds of variables to optimize our model in a rapid time frame, so that each and every year we make transformational improvements rather than just the stepwise everyday improvements.
Thanks a lot. Joe, you shared that you were able to build the first GLMs, but can you give us maybe more insight on why and what is the value that you get out of Akur8?
Yeah, so BAS was at a point where we were ready to start building our own GLMs, but we have never done that in our history before. So, thinking about what was the next steps to take, we had to look at some statistical analysis software packages, and you think of SAS or you think of R, and then I kind of get nightmares of grad school. And then I stumbled into you guys and the ease of use, the visualizations. I'm a very visualization type of person when I learn. Having that available and being able to just do a 2-week pilot like we offered there and bring it to management, and management to be able to, who doesn't have an actuarial technological background at all, to be able to see exactly what the pricing differentiations were for the different factors that we had imported in there. It made perfect sense to all of us, and we were able to go from no GLM ever to putting one into production in 4 months, so we couldn't be happier thus far.
Thanks a lot. And John, for Tokio Marine North America Services, can you share also some insight?
Sure. Since we have so many market segments, we're in a number of lines of business, we have to put ourselves in a position to make many models quickly. So the first model we made a few years ago took us 6 months. That is just way too long. There's no way we can introduce a model every 6 months. We wouldn't be serving our customer. So rather than doing that, we looked at bringing Akur8 in, and the speed of getting a model developed could go from 6 months, certainly to 2 weeks, more recently, but I'd like to see it in a couple days. I think using this tool, once you get familiar with your data, getting familiar with the tool, you can really generate a number of models quickly.
Thanks a lot. And Sheri, so we have a global partnership with Milliman. You reviewed deeply the solution, the Akur8 solution. Can you share why you are convinced that bringing machine learning to the actuarial science through platform, through Akur8 is something key and strategic for the future?
I do see a lot of clients that come to me and they ask for help when they're ready to actually file their models with state regulators or introduce them into their rate plan. And at that point, sometimes it's too late when I say, well, how did you do your holdout sample, and did you do a training sample, and what did you do? And we get down the road and I realize, well, they didn't really do the holdout sample properly. It's too late. They already used all of the data to build the model. And we start going through and we start putting together all the regulatory support to get these models approved. And some things just weren't done with the kind of rigor that would allow us to get these models approved really quickly with the regulators and give them what they need. And so having a software that really puts guardrails for you, and those guardrails can move depending on your sophistication and what you would like to do with the software, it's really helpful to have that there, so it just creates really good best practices for your data scientists and allows someone that has a lot of experience to use the software all the way to someone that doesn't necessarily have a lot of experience. And the reason why I think we really like it, because the folks on my modeling teams, they have a lot of experience, and they came to me saying, no, we want to build it in R, we want to build it in Python, and they actually looked at the software and they said, actually, it does a really good job at creating these models and predictive models, and it's extremely predictive. So why would I want to do this manually when I can do it automatic? So I think about it like driving a car. I did learn on a manual stick shift. It doesn't mean I drive every day with my manual stick shift. No, I drive a Tesla. I have my latte in one hand. I have my hand kind of on the steering wheel, and my car's taking me to work every day. Why am I going to put my latte down and start driving with my stick shift when it's going to take me a lot longer and I can't multitask? So this allows you to really multitask and allows you to get it done with a really good framework. And we had a team that helped the Akur8 team put together the regulatory support, so that once you've got the model built, you really just have to push a button and all the regulatory support comes out. And it's just music to my ears, because as a former client, some of the regulators are my clients, and on their behalf I review filings. So it's music to my ears when I see something come in that it's all supported, it's all set up, all the questions are answered. So yes, I think it's a huge advantage, not only for clients, but for my team. We're actually using the Akur8 software right now to do something really cool and to stand up a new rate plan for a new product. So it's really cool.
Thanks a lot. So thanks to all of you for all the insights. Now I would like to really show you what does it means bringing machine learning to the actuarial science. So how could you use this kind of platform? So I'm cautious on the time that we have, so I will move directly to the next one. What is really, really important is that you can automate part of the process within the pricing use case. The data-driven part of the process can be automated, but you need to keep full control and impact the model created with your business decision and your actuarial knowledge. So we are not talking about a fully automated process, but a mix between data science and actuarial science. So it's a mix between automation and expertise-driven decision that you need to inject in your model. And why it can unlock really interesting business outcome for insurance, because you can bring speed, you can bring efficiency, but performance, better model, more predictive, and you can keep the safety and the governance that you need to have on the model created. And so now I will just let Thomas from the other side of the stage to do a quick demo to show you how we mix data science and actuarial science to build pricing models.
Thank you. So I am Tom Holmes. I'm the head of U.S. Actuarial
we can't hear you.
Science for Akur8. Don't worry, I'll be coming on the mic pretty soon. Maybe. Coming. I'll keep talking. I'll just keep saying granted.
Thomas, we can't hear you. Yeah.
We're working on it.
Okay, sorry.
We'll get it. Trying to talk in a normal voice.
Do you want me to come? I will give you my mic.
4? Oh. 4? Yeah. Keep, yeah. I hear something. That sounds good. Can you hear me now?
Yes.
Excellent. Yes. So I'm going to do a quick demo and show how Akur8's transparent machine learning software works in practice. So Akur8 it's a fully cloud-based software, and every user has their own dedicated cloud environment. Over on the left, you can see data. This is where users will upload their data, do some minor data prep, but you don't need to do extensive feature engineering because that is automated in Risk. And so in Risk, you can build all kinds of actuarial models, frequency, severity, pure premium, decision models, really anything that you would want to do. Demand is an enhanced demand-specific modeling component that has an elasticity modeling option. And rate is where you can take all of these insights and compare them, compare models, and get exports that you can deliver to your stakeholders. So the setup for this model is very different than a traditional modeling process, where in that traditional modeling process, you'd pick your best 10 to 20 variables, and you would iterate over that. Here, we deselect the variables that are not in scope. So this is a frequency model. We're not going to put our severity into it. And the top variables included are things like driver age, vehicle age. This makes sense. And you can see we still have 219 variables in scope. That's OK. If you don't have 219 variables, there are a lot of vendors here. Get 300, 500 variables. You can plug that in. And what Akur8 will do, we will define a basic parameter where we'll say we want to look at models between 5 and 30 variables. We want 5 steps in between there. And Akur8 will automatically build these models. So we're building 175 models right now in parallel. And so what Akur8 is doing is performing automatic variable selection, automatically transforming the variables, handling correlations, and really building a range of models to be analyzed. And so this gives actuaries and modelers more time to actually look at the output. And so the output of all those models is this range of models. It's essentially an efficient frontier of models where we have the number of variables across the x-axis and a measure of predictive power across the y-axis. And we can see there's kind of a sweet spot that the actuary will want to look at. And because we know that the best model statistically is not necessarily the best model to implement, actuaries will be able to dig into these fully transparent models and really compare these models and make sure that they are actuarially appropriate. They are fully transparent. So here you can see that this is exactly the effect that age will have on this model. And it's also, you can apply actuarial judgment. So for example, if you have some decent underwriting constraints, you probably don't have a ton of data with 3 accidents. And so you can adjust that data or plug in your current values, your competitor values, to make sure that the output of this model is fully actuarially appropriate. There's also an automated interaction search where you can define, I want to look at 20 interactions or custom interactions, and it'll again display that in a search format, adding 1 or 2. And then you're able to do an automated geographic search. And so this will automate the territorial analysis for you and show you a very nice map of where your hotspots are and where you might have a lower frequency. So once this model is complete, there are various exports. You can export the coefficients, model predictions, documentation in a PowerPoint format, as well as filing support customized for every single state. So we've partnered with Milliman to fill out the modeling questionnaires. And so here, for example, is Arizona. We've pre-populated the questionnaire as much as possible, as well as have a list of dedicated, or of recommended exhibits to send in. So that is incredibly helpful for us actuaries to spend a lot of time on filings. And so once you've done it, when your model, you're satisfied with it, the next thing to look into is our rate module, which is this open sandbox to create the scenarios that you want to compare. So you can import your models, you can import your current premium, you can import whatever you want, and then you can perform a dislocation analysis, which will show you the impacts, as well as the ability to tell you what is driving those impacts. So this is the segment that is greater than 20% of impact. And then from there, you can use the reporting module to customize reports to export and share with stakeholders. So every insurer is unique with unique data, and Akur8 offers a 2-week pilot for free to test our solution on your own data and measure the immediate benefits of Akur8. This is a very quick demo, so please reach out to us or stop by our booth if you have any questions, and now I'll pass it back to Sam to wrap things up.
Thanks a lot, Thomas. Sam, do you want to conclude?
Okay, so I think we don't have much time remaining, so I wanted to thank you all for attending this session. It was just a very quick overview of Akur8, but we would be very pleased to welcome you on our booth. The same way Milliman would be very happy to welcome you on their booth as well. Don't hesitate. We can answer all your questions. We can go through a detailed demo or detailed presentation. We are also sponsoring the happy hour later today, so we can even have a drink and discuss insurance pricing. That's one thing. Second thing, as Thomas just mentioned, we are offering a potential clients to run pilots. Pilots are free of charge, especially for ITC. We've got an offering together with Milliman, where we are offering to run a 2 weeks pilot, and you are supported by Milliman consultants. So if you're interested, just pass by one of our booths today, and we'll make sure that we can plan that and just allow you to test what could be the impact in your organization. So thank you very much. I don't know if we have questions.
I'd say just one more thing. I talk about culture. It is a fantastic experience working with Akur8, so it is a great tool and all that, but I'd say from a partnership perspective, just my 2 cents, having seen a lot of these partnerships, they are extremely helpful, extremely responsive, jumping in every other piece. So take that for what it's worth, but it's been a very great job working with each other, and it's not just a tool, it's also the people who have been fantastic. So I'll add that as a client.
Thanks a lot.
so
It
much.
was not prepared. Thanks for the feedback, and thanks to all of you for being here, and thanks to be here with us today for the session.